if the US is going to have this economic crisis, if you will, that's going to create a crisis across the whole globe. Everybody's going to be impacted in it. So everybody's going to be looking for a place to hide. And gold is the one place where you don't have counterparty risk. It's really the ideal place to hide.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Don Durrett of goldstockdata.com. Don, thank you for coming on the show.
Yeah, Steve, great to be back. It's been a while.
Yes, it's been several years. I was hoping you could start out for, I think most of our audience knows you, but for those that don't, if you could give us your story and how you got into studying gold and silver stocks.
Yeah, I usually don't like telling the story. I tell it a lot, but it's an unusual one. Um, I actually came into gold, became a gold bug in 1989. I was reading an esoteric book. I'm a metaphysical writer. I do a lot of esoteric studies. I study the future, and I'm reading this book, and in the book, and it says that the USA, the America, is basically in it's in its sunset that the U.S. empire is going to end and U.S. is going to come, and our lifetime is going to come to an end. Now, this was in 1989, and like I said, I kind of studied the future. So the one thing that I really kind of connected the dots on that is if, okay, the US empire is ending, that means that the US economy is ending too, because our economy is very, very closely tied with our basically global hedge money. So if our empire is ending, our economy is in deep, deep, deep trouble, and we are accumulating debt at the time. So I'm like, uh-oh, this is going to be really good for gold. So I became a gold bug in 1989. I actually started investing in gold mutual funds in 1991 and then juniors in 2004. But I I did follow up research. So it wasn't just that one book. I went and I looked for correlating data that implied that indeed the US empire was ending in our lifetime, and I found a lot of it. And so I became more of a gold bug, just getting stronger and stronger and stronger the more research I did. And now it's starting to become more obvious to people that the US empire is ending, that the US bond market is in trouble. I've always said that the only reason why I own gold and silver mining stocks is because of the US bond market. The mining is a very terrible business. If you have a gold mine and it's producing income, that mine is going to only has so many years of production, and then you got to replace it. And it costs a lot of money to find mines. It's hard to find them. It's just a terrible business. And you're always dependent on the price of gold for your profitability. So you're speculating. That's what you're doing. You're speculating the price of gold is going higher. But my belief that the bond market is going to end up basically failing at some point. So I was always in this for the long haul. It's a long-term investment waiting for that bond market to break down. Now so I started doing juniors in 2004. It's been a long wait, 20 years, but those 20 years has allowed me to collect a lot of stocks. That's what I've been doing, just collecting, waiting for that outcome. And I think that outcome now is becoming more obvious to other people. I've always believed that it's going to happen. I've always called it, considered a fait accompli. That there's no way that the U.S. can avoid this outcome. And now the question is, where do we go from here? But that's a different question.
Okay, so you've been into this since 1989. That's pretty cool. I was 10. And you like to study history and predict what's going to happen into the future. And back then, it sounds a book kind of like maybe like The Fourth Turning by Neil Howe, that basically the U.S. is ending. And if that's true, then the U.S. economy will be ending. And if that's true, then the U.S. bond market is going to end. And what is going to be the natural recipient of that capital? If it's not going into bonds, then it's going to go into gold. And so that led you to a very leveraged play on that, which is the gold and silver miners.
Yeah, yeah, absolutely. It's pretty obvious that you have $100 trillion in the stock market, about 60 in the US and 40 internationally. Then you have 150 trillion in bonds. And then you probably have another 20 trillion in fiat currency just sitting in banks, money market accounts. That's 275 trillion dollars of assets that are at risk. And so where does that money go? Can you go hide in, for instance, you can't hide in stocks. If things go south, that's not going to be a good place to hide. If the US bonds are going down, good luck with any bonds anywhere in the world. Bonds are basically not going to be a great place to hide anywhere. And then fiat currencies if you're inflating. So basically, if the US is going to have this economic crisis, if you will, that's going to create a crisis across the whole globe. Everybody's going to be impacted in it. So everybody's going to be looking for a place to hide. And gold is the one place where you don't have counterparty risk. It's really the ideal place to hide.
Yeah.
And so, and that's the reason. Now, back when I was doing this, like when I started my website 2012, it was like, what are you doing using $100 silver, Don? 2,500, what's that about? Well, just stay tuned, people. Stay tuned. Now it's becoming more obvious that I kind of had an idea of what's coming. And so it's definitely a thesis, if you will, that that this crisis is coming and that gold's going to be the winner. It's definitely a thesis. It could be wrong. It's not investing. This is not investing. This is speculating. It's basically saying you're connecting the dots and you're basically saying, okay, this is the outcome that you're expecting, and you leverage that bet and see what happens. But right now, I feel unbelievably confident. I've always been confident of the outcome, but right now, I mean, today as we speak, I mean, gold has made quite a rebound off of its correction. It was down 12%. Yeah, go ahead and bring that up. Gold was down 12%, and I told everybody to expect a 20 to 30% correction, but I also said it would only last 4 to 8 weeks. And so you're seeing this, it's already back more than 50%.
Yeah.
And, percentage-wise, it's like less than 5% from where it was at, and it was down 12. So we're already, we're heading back to an all-time high, I think. But then it'll crash again. I've been telling people this. The final crash for gold, the final deep crash for gold is going to be when the S&P 500 crashes. So let's go ahead and bring that chart up. And so I believe the S&P is going to crash 40%. Now it won't crash 40%. Oh, it won't crash 40% overnight, but I believe it's going sub 4,000.
Okay.
And so right now, I mean, we're way up there at 6,800, but we were all the way down. If you go back,
this is
go back
40%, just to put it into perspective right
Yeah,
here. That would put around 4,000 back down around the lows of October 2023.
Yeah, so that's where I'm expecting to go. And and once this thing rolls over, um, I do not this is a 15-year. We can go all the way back. You can go all the way back to 2005 here and show the whole thing. This has been a 15-year market.
Yeah.
And so, we had that one correction, but we bounced off of it. But the bull market, it never failed. I mean, you can see that 200-day moving average, and every time it touched it, it rebounded. And you can see, is the blue line the 200?
That's the 200 weekly.
Yeah, 200 weekly. So the 200 weekly, it's right on 5,000. Some people think that that's going to hold. I don't. Some people think 5,200 or 55,000 might hold here on the correction, that will be as low as it goes. I don't think so. I think if you get that low, I think it's just going to keep going, and we'll go all the way down. Now, what could happen is you could go down to 5,200 and then it bounces and it goes back up, and then it's a false rally, and then it goes down to 4,000. That's probably what it will do. It won't go down in one shot. You'll get one relief rally, but it'd be a false rally.
Kind of a dead cat bounce.
So when that crash comes, our gold and silver miners and gold, they will all get pulled down with it. So we'll see. My cycle low targets is around 3,700 for gold and 42, 43 for silver. Now I'm hoping we don't touch those.
Yeah.
I'm hoping we don't, but those are kind of, I think they're in play when that
Okay.
correction finally comes. But so I'm hoping to get an new all-time high here before the year end in gold. That'd be fantastic. So then if you did that, then I'm hoping 3,700 holds, maybe 3,800. 3,800 be good. But I also believe we're in a bull market here in gold. I mean, you can see that the 200, this is a daily chart.
This is a daily. This one's now the
Yeah,
200 daily. Yeah.
yeah, yeah. So even and if you do the weekly, it's even lower. The 200 is even lower. So we're way, yeah, do the weekly. We're way
Yeah.
above the 200. Look at that. We're
Yeah.
way, way, way above it. So that we're this for this bull market to break down. It's not. I don't think it's going to happen. So we're in a bull market. That means any correction it will likely lead to a rebound. That's what bull markets do. So I'm very bullish that any correction. I always say to ride the train in a bull market, and now's a good example because a lot of people jumped off the train. What I mean by jumped off the train is they sold their mining stocks because we had that big run and then it crashed. And most people are down over 20%, and most people can't handle that. They can't handle a 20, 25, 30% correction, so they get out. And a lot of people they got off the train and now they're not on it, and and silver's near almost back to where it was at, and they're like, oh my God, what do I do? And this
Yeah.
is why it's tough to trade bull markets. This price action this week is a perfect example of that. Very difficult to trade them. I always say, in a bull market, you got to ride the train and buy the dips.
Okay. Okay. All right. We got a lot of questions, more than we've gotten for a guest in a long time. So I'm gonna get right into it here. You basically hit Nautica's question, what price levels you're watching for gold. Silver, I'll bring up the silver chart here. We're recording on what day is today? Wednesday, recording, and silver had a 5% move here, almost tapped on the all-time highs here within pennies of our all-time highs on October 17th in the futures market.
Yeah.
What are your price levels here for silver?
Well, I think that we're going to go back to 42, 43, believe it or not.
Okay.
And if people are like, no way in hell that's happening, Don. And I hope I'm wrong. But when the S&P crashes, that's where I think we're going to. So,
Yeah.
people that are loading the boat here could be catching a falling knife. But if we go back down to those levels, I do not think we'll stay there very long. And then we'll bounce and we'll be off to the races. Now, I'm expecting $75, $85 silver in 26.
Okay.
Some people are expecting 100 to 150, so 100 and 150 are actually in play next year, which is kind of insane, right? But I think 75, 85 is kind of what I'm expecting next year. And so we're looking like $4,500 gold. So if you do a 2% of 4,500, that takes you to 90
Yeah.
silver. I don't think we'll go to 2%, but we'll probably get 1.7, 1.8. So we're currently about 1.2. And I think we're going 2.5, maybe 3 is where I
Okay.
think we're going. And so my expectation is $6,000 gold. And if you do 2% on that, it's 120.
Yeah.
2.5 is 150. So my target is $6,000 gold, 125, 150 silver.
Okay.
And
Okay.
so that is, and now I'm fingers crossed, history repeats, right? I'm very confident that gold's going to go to 6, 7, or 8,000. I don't know where the top's going to be when because I think the reset will happen before 10,000. And if the reset happens before 10,000, then you're not going to see that, massive gold prices. But I do think we're in this current environment in the next 2 to 3 years, just call it 24 to 36 months, we'll see 6, 7, or 8, which is amazing. Now, we don't know if silver's going to correlate to that. But anybody that's betting that silver's only going to do 1%, I think that's a bad bet.
Okay.
I
Okay.
don't think that's going to be the outcome. And so I think 2% is a legitimate number, but we're guessing here. We're speculating on the future. We're hoping history repeats itself. but
This is the
I'm thinking,
percent you're talking about. So this is silver
yeah,
divided by gold. So right now it's
yeah,
at
one,
1.3% the
yeah,
cost of gold. And so you could see it. Oh, I got to back up for this.
yeah,
That's a first world problem. Okay, so
yeah,
you could see it going up here like 2.5%,
yeah.
maybe
Yeah,
2%. That would be 50 to 1.
two, yeah, 2 to 2.5 is my expectation.
Okay.
And
Okay.
you can see, I mean, in the chart there, whenever you have bull markets,
Yeah.
you can kind of expect to get above two.
Yeah.
And so I'm expecting to get above two. And so if you're betting on one, you're at the very bottom of that chart. I mean,
Yeah.
good luck with that happening in a bull market, right? This is a beautiful chart, by the way.
Yeah.
So it really shows that the chances are, you know, that gold, if gold goes higher, silver's going to go a lot higher. It's going to outperform gold. So, but it's going to be very volatile. Gold is much more stable, much more, steady rise, whereas silver, we could see some radical volatility. Absolutely, because of potential shortages in silver. And I think we're going to get them. We're already seeing potential shortages already, and we're early in the game. So if we get shortages in silver, who knows what could happen? We could get some government action that causes massive volatility. So that's coming, and a lot of people can't handle that. I'm expecting it. So I'm expecting some of my silver miners to go down 25% in a single day.
Oh, okay. That
Yeah.
is volatility.
Yeah, and we're talking quality silver miners. Yeah, that could happen, but it won't last. It might last. Most of these corrections are only going to be 4 to 8 weeks, like this one. We're just having a correction. The last correction looks like it's going to be about a 4 week correction. 4 to 8 week corrections is kind of what you can expect in these bull markets.
Okay.
So I lived through 2004 to 2010. We had a lot of these. We had a lot of
Yeah.
these 4 to 8 week corrections. They were normal, but every single time we went higher.
Okay.
Right? Yeah, you get the correction and then it stays down for, 4 to 8 weeks and then boom, it goes back up. So we can expect that to happen.
Okay. Okay. Um, all right, let's see. That hits Shirk's question, Nautica's question. Nate wants to know, let me stop sharing the screen here. What ratios or metrics do you use for screening your stocks at first glance? Basically, he's asking for like red flags for quick elimination so you can focus on the ones that matter.
Yeah, so I wrote a book to help people to understand how to do this because when I started doing this in 2004, there were no books, zero. I remember asking Bob Chapman, can you recommend a book for me for junior miners? He said, sorry, kid, there aren't any. So I had to learn it on my own. So I wrote my own, and it's basically a textbook. It's pretty thick. And that book will explain how to do it. So it's on Amazon. Just look for Don Durrett Gold and you'll find a black cover. That'll show you how to do it. But for me, it's not easy. I mean, I use in chapter 10, I use 10 different factors that I use. Doug Casey uses 9. He calls it the 9 Ps.
Yeah.
I use 10. And so what I'm looking for in those 10 factors is red flags. And so if I find a stock that has, a couple red flags that I don't like, I don't buy it. These are just stocks I don't like. And people are like, why don't you own that one? The people always, there's a few stocks that they just don't really, they don't get my attention. And I don't want to own that stock, right? But I own 163, I think now. But there are several stocks I don't own that people own that think I should own. And I'm like, no, they just don't get my fancy. I'm not going to buy those stocks. But yeah, so I use basically 10 factors, and basically it's a combination of the upside potential of the company in tandem with the risk, and the risk is the red flags. So if I can find a 10 bagger, that would be the upside. And I use future gold prices for my 10 baggers, right? Right now I'm using $5,000 gold, $100 silver, but I'm going to bump that up real soon next month. And if I can find a 10 bagger that has very few red flags, I'm going to buy it. For instance, last Sunday, I found a 10 bagger and it was Silverco Mining. And it was a new company down in Mexico, and they have a mill, and it's basically low capex to restart it, and they have exploration potential. And I'm looking at this stock, and I'm trying to find red flags. Very, very few, but it has the 10 bagger. So when I find those, I just buy them. So I do podcasts on Saturday nights, and I told everybody, I said, okay, I'm going to buy silver coal mining on Monday morning. And I go, I'm going to have to pay more because I'm telling all you guys. That stock was up 37% today, 37% in one day. And it was up already. It was up that today is Wednesday. It was up Monday and Tuesday. So it's up 45% since I bought it Monday morning. 45%. I think it's actually more. I think it's up like 55. 55% in 3 days. That's the kind of volatility you can get in these miners. It's absolutely crazy. But that stock had a market cap when I bought it $100 million, and it could eat. I mean, if you look at silver prices, $100. So if silver prices do go to 100, and you look at the free cash flow, I mean, it was uber cheap at 100, but now I think it's up 50%. So it's probably 150 million now, but it's still cheap. And I told people, I said, I'm going to buy more on the crash. So when the crash comes, I'm going to buy more, but I don't know if it's going to drop 50%. Maybe it only drops 30. But a lot of these stocks that have momentum like this, when they take off, it goes up 50%. A lot of that is momentum money, trader money. And so what will happen is the trader money will stay in until it rolls over. And then once it rolls over, they'll jump out. So this stock will probably go, lose 15% next week. I'll have a little bit of weakness, and then it'll probably lose it. So you can be patient here. You don't have to buy it, up 50% off in 3 days. You can wait for the next correction. But that's just an example of the kind of the leverage that these stocks have. And that's how I invest. I mean, I find a stock that few red flags, it has 10 bagger. Those are development plays, but was a near-term producer. But ideally, what I like to find is undervalued producers. That's my favorite. I expect to make 80% of my profits from producers. So I love producers because they can grow production. So I chase free cash flow. So I want companies to grow production, grow cash flow. That's what I want. That's what I'm looking for. I've learned that that's where you get uber leverage. You can get a 10, 15, 20 bagger very quickly from a producer that's expanding production, that's already cheap. Huge leverage.
Okay. Okay. All right. So massive leverage on these. Basically, red flags. You wrote a book on it. Just Amazon search Don Durrett and gold. It'll be the first one that comes up. You're trying to balance upside potential with the risks of these things, and like you just emphasized, these things can move radically even in just a day. Got some other questions here. I'm going to try to put them all into one here. Basically, Jake, Nautica, Craig, and Santos are kind of asking if you were to, how could I put this? Like if there's what's your exit strategy? Like, how are you going to know when to sell your bullion, and how are you going to know when to sell your gold and silver stocks?
Yeah, this is great. So in my book, I talk about my exit strategy. So I've been very disciplined buying my stocks, and I'm going to be very disciplined selling them. So the way that I buy stocks is I learned very early on that I'm not a trader. I don't want to have to buy and sell stocks on a daily basis. I want to buy a stock and be able to hold it, without, not have to manage the heck out of it, right? And so the way that I do that is I use risk reward. So stocks that have really good risk reward that I really, really like, they might get 1% of my total cost basis. But those stocks are actually fairly rare. It's very hard to get 1% of my money. And then I go down to 0.75 for, it's great stock. I got to own a bunch of this, but I won't give it a 1%. Then I go 0.5, and 0.5 is really the average. That's my average. So most of my stocks are like 0.5. And so I found that that's kind of actually my pain point. If I do 0.5 in a stock, I really don't care if it goes bankrupt. I really don't. It doesn't bother me. I just go buy another stock. So that's my pain point. So I don't want to buy too many stocks above 0.5 that I'm not really confident in. Those are high quality companies. And then I go to 0.25, 0.35 for high risk stocks. So that's my discipline in buying. So I buy versus using risk reward. Now, exit strategy. So my exit strategy is I look at history and I say, okay, how well did the miners do from 1972 to 1980? And then how well do they do from 2002 to 2011? I look at those two periods, and basically you get about 8x somewhere in there, kind of average is kind of what you kind of expect. So the bottom in this stock market was about $1,000, 1,050. 8x off of that bottom is $8,000, 8,000 gold.
Oh,
So I think we can expect $8,000 gold if history repeats, and history tends to rhyme. So what I've done is I basically put I'm throwing a target out there. So in order to sell to a target, you got to have a target. So my target keeps slowly going higher. At one time, I think I had it as low as in my book, I think I had as low as $4,000 gold I was going to start selling. But the reason why it never made sense is because silver never came along for the ride. Now, if you had a 2% at $4,000 gold, silver should be at $80. So if silver was at $80 now, maybe I'd be selling, right? But it's not. So now we go to $4,500 gold. If silver is coming, if it's coming along now, if it's at $80, I might start selling at around 4,500. So when I start selling, it's going to be when silver basically kind of catches up and my stocks are doing well. But it might be somewhere higher than that. It could be 46, 47, 48 before I actually start selling. And so that's when I start. And now I'm going to sell. Currently, my plan is to be completely out at $6,000 gold. Now, I'll be early. So right now, what I'm doing is I'm creating exit prices. Like today, I put it in an exit price of Vizsla silver at $50. And I actually have a tool on my website that will show you these upside targets. Vizsla should hit 70, but I'm not waiting for the uber top. I don't have to. So I'm actually been throwing targets on stocks. I have about 15 targets right now. And in my website, it'll actually send you an email when they hit that number. And so I have 15 stocks. I'm going to sell when I hit those numbers. So it's a combination, when do you sell? I'm going to sell when I hit targets. So these targets, massive upside for these stocks. When these stocks hit massive upside, I'll sell them. And then, around $5,500 gold, I'll start selling more aggressively. So from 5,500 to 6,000, I plan to sell aggressively. And at 6,000, I plan to be out. Now, I've done the calculations. And I should be able to sell everything at 5,500 and hit my goal. But if things are ripping and we got a mania, I'll probably stick around till 6,000. But so right now, when I do my math, I do my calculation, somewhere between 5,500 and 6,000, I will have hit my number, if you will. I don't know if you've seen Wall Street 2, but in Wall Street 2, Josh Brolin goes, what is your number? He goes, what is your number? He's talking about when you're done, your retirement number, right? And Brolin says more, right? Great, it's a great scene. But I have a number, right? And once I hit my number, I'm out. So that's my exit strategy. So, figure it out. But one point I want to make here about exit strategies is I talk to a lot of people that don't have one, and they just want to just ride. Miners are very cyclical. They're very cyclical, and you don't know when you're going to get rug pulled. And we could have a rug pull, and it could take 6 months to get back to the all-time high, or 3 months to get back there, and you were this close from getting out, and now rug pulled, right? So don't expect, and when the reset comes, we don't know when the reset's going to come. I don't think it'll happen 26. The odds of it happening 26 is very, very low. But when we get to 27. And things are going south for the economy and the bond market starts weakening, a reset, you don't know when they're going to pull that reset out. And once that reset happens, we could easily get a rug pull. And so you want to kind of front run the reset.
Okay. All right. So basically what's the word? I guess take kind of a shotgun approach. If you got 1% of your portfolio in a company, you are uber bullish on them. Then the next one you're still pretty bullish is 0.75%. And then you go for your highest risk ones, you're down to 0.25% to 0.35%. You look back in history at the 1972 to 1980 bull run and the 2002 to 2011 bull run, and that was an average of 8x. And so that would take us. I'm thinking of the bottom part of the cup in the gold chart, and that was around $1,000. So that brings us up to 8K. But your target right now is around 5,500 to 6,000, with silver making up about 2% of the cost of gold. And so that's kind of your ballpark target for now. Once we reach those levels, you'll see what the market looks like. But that's what you're thinking of for your exit strategy now.
Well, actually, I think 5,500 to 6,000 is fairly easy. I'm saying that I'm leaving, I'm getting out early at 6. My target is really 6 to 8.
Okay.
So, yeah, and my silver target really is like 150 to 200. So my exit price is 125, 150, 5,500, 6,000. That's my exit. But my actual expectations, is 150, 200, 6 to 8.
Okay.
That's
Okay.
what I expect to see.
Okay. And you mentioned Vizsla Silver, so we had a question on that. I'm going to just bring up the chart here to emphasize your point. So this is on the New York Stock Exchange. So this is trading just south of $5 now. And you said when you do the math on this, I don't know what you used, maybe 150 silver or something. You could see this thing going to $70.
Yes.
Wow. Wow. Okay. That is nuts. Okay, let's get into some of the stock specific questions here. It wasn't specifically on Vizsla, but Kevin wants to know what do you think? Okay, do you have a favorite silver junior among Aya Gold and Silver, Abra, Vizsla, and Avino?
Yeah, we'll just take each one and
Okay.
then he can basically decide. But I, I don't like to pick winners. I don't think you can pick winners. I think all you can do is pick potential winners. Nobody can look at these four stocks and say that's going to be the winner. Nobody. It's
Yeah.
impossible because there's too many variables at play. They could get taken out, they could do an acquisition, they could do a discovery. There's just way too many variables. So all you can do is look at risk reward. But we can look at each one. So Avino, I'm going to start with Avino. So Avino, as far as I'm concerned, has might have the best risk reward of any producer, 10 bagger. Now it's not going to be overnight, but they basically are very undervalued versus what they plan to do. So they plan to steadily add production over the next 3 years at a low capex, basically organically. So they're
Okay.
going to grow. They're going to be about almost 4 million ounces next year, and then they're going to double that to 8 million ounces over the next 3 years, and very low capex. And they have a good balance sheet. So they basically have a very clear path, if you will. So if silver prices go to 125, 150, they like my target for them is also $50, which is kind of similar to Vizsla. But Vizsla has to build their mine, and there's things, things can go wrong with that. You never know. Whereas Avino has got more of a kind of a clear path to $50 versus
Yeah.
versus Vizsla. But Vizsla, I mean, it's a thing of beauty. I mean, it's my second favorite development story. But I see both Avino and Vizsla as basically, 10 bagger outcomes in about 3 years, maybe two, but probably 3 years. Well, at least 3 years for Avino. If everything falls into place, I mean, they're similar stories. I want to own them both. I don't know which one is going to be the 10 bagger, but you don't know which company is going to grow production from here. So we don't know that. We don't know how Vizsla is going to grow production or how Avino is going to grow production, but whichever one grows production is going to be your bigger winner, if you will. We don't know, right? Okay, Abra Silver, I really believe that they're going to sell their project. And the reason why I believe that is because I've been following them for 10 years, and it's basically been a two-man show. You got the
Hmm.
CEO who's I think he's a finance guy. He's never built a mine before. And then he has this geologist, his right-hand man. And they've been very happy just drill, 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 drill. They've never been aggressively trying to permit, aggressively try to, build this mine. And, my gut feeling is they're going to sell it. So from that standpoint, I own it to wait and see who buys it. Now, if they do build it, uh, it also has 10 bagger upside. So you got all three of those. Ironically, all four of these stocks have 10 bagger upside, all four. If they do build it, then they will. But I own it because I like big projects. We'll see who buys the stock. And then the fourth one is Aya. And the Boumadine project is just a thing of beauty. I mean, I absolutely love it. So my first project is Cordero, which is Discovery's project. My second favorite is Panuco, Vizsla's project. And my third favorite is Boumadine. And then my fourth favorite is Los Ricos, which is the GoGold. So I got to own all of those projects. They're just all beautiful projects. So Boumadine, it's going to take a while. The thing is, the downside with Aya is Boumadine's not going to get into production until like 2030.
Yeah.
So we got a 5-year wait on it. That's ugly. But the good news is that once we get to like 28 and they go into construction, I think this stock will just rip. So, but of all these stock, well, Abra's got the red flag. They're probably going to take it out, and Aya's got the red flag. It's not going to go into construction until 28. 30. And I think both Vizsla and Avino, they're kind of the call here of these four stocks, because those stocks in 28 will be, really, really juicy stocks.
What the Boumadine? They just came out with the what was
PEA.
it? It was the PEA.
Yeah.
I was at the conference when it happened. They gave me the printout. What did you think of that?
Fantastic. This is 450 million ounce silver equivalent, and it's growing. This is going to be, I think, I'm speculating here, but I think this is going to be easily 600 million ounces, and it could be 700. This is a big mine. So the first PEA is at 400,000 ounces gold, but it's basically a polymetallic mine. I think 60-70% gold and silver, though, revenue.
Yeah.
But it's gonna be more than 400,000 ounces. I think when they might not be able to get it much bigger than 400,000 ounces on the DFS, but by the time they start construction, I think they'll already have on the board, if you will, how they're going to expand it. So I think this is at least a 500,000 ounce. Boumadine alone, I think, is at least 500. The other project, Zagounder, is 5 million ounces, and I think that's going to grow 6 or 7 is my expectation, because they're finding more silver there. That's a pure silver mine, by the way, 100% silver. So when you combine them both, the free cash flow and Aya, neither of these mines are high cost either. So, but Aya's longer term. We're looking at 2030 for production.
Yeah, what do you think about? I was attracted to Aya because of its pure silver play in Z-Grounder, and I thought, man, finding a more leveraged one to silver there is tough because it's only silver that they're making money from right now.
Right. That's not why you own Aya.
Okay.
You own Aya because of Boumadine.
Okay.
Remember, you're always thinking about free cash flow. What is the free cash flow going to be future? The one thing about these gold and silver miners, do not invest for the next 12 months on mining stocks. Don't do that. It's too volatile. It's like, okay, I'm going to go do Aya. I'm going to focus on the next 12 months because it's a pure silver play and silver's going up. That's not the right way to do it. Let's put it that way. It's too much volatility. The only people that should do that are traders. Now, if you're a trader and you're comfortable trading, then yeah, go ahead. But not too many people are good traders.
Okay. Thank you for the advice. Okay, we got a couple of questions here. I'm trying to press all these in because I know you got a hard stop. And okay, Best Investor and Kevin is basically asking, okay, Silver Tiger got their approval for the permit in Mexico. How do you see that affecting GoGold? This can't be bad news, right?
Right. Both Silver Tiger and GoGold are both beautiful stocks. Well, my personal opinion. They basically have the goods. they basically both have, I mean, there's not very many, companies out there that have large silver deposits. I mean, if you look back the last 10 years, who's really, made a significant silver discovery? I mean, you got Dolly Varden's made a really nice one.
Yeah.
And then you got Vizsla. But other than that, you could say Boumadine, Aya. But other than that, I mean, there haven't been any. They're just rare. I mean, so anybody that has one, they're in good shape. They're sitting pretty, if you will. And so Silver Tiger, they got their permit. GoGold, I'm very confident they're going to get their permit. And so, we want to own. The thing is amazing is that we're early in this bull market. So all of these stocks remain cheap, which is kind of crazy. Now, I mean, you can look at silver. We're looking at this chart. You look at Silver Tiger, it was trading at 20 cents. 20 in the 20s, right?
Yep.
That's when you wanted to buy it, but now it's at 80 cents and it's still cheap, which is kind of insane. And that just shows you how much leverage there was for the early bird gets the worm. But even at 80 cents, this stock will not get pricey until around $2, $3, because and it's the same with GoGold. And the reason why is because the price of silver is going to go a lot higher. We're at $50. As silver goes higher, the company, they get more and more valuable. So they won't get pricey, if you will, for a while. These stocks, unbelievable leverage to the silver price. And if the silver price does what I think it's going to do, 125 to 150, these stocks have incredible leverage. And so they're not pricey yet. Now, that said, I told you that I think the silver price is going to 42, 43. So if you buy these stocks at these levels, you're going to get rug pulled. You're possibly going to catch a big, fat falling knife, a big, painful falling knife, if you will. That's the difficulty of bull markets, of being late to the party. You want to buy this stock a long time ago, right? So everybody that's coming in now, basically the bull is not going to give you a free ride. So right here, where did high was 260?
This is GoGold. This one's on the TSX. I could pull up the
right.
MTC if you want.
No, that's fine. So we're basically 262, right?
Yep.
Wow, this thing was at $3 very recently. So this one you probably won't catch the falling knife quite as bad as some of these other stocks that have really ripped, but they have potential of going down 20, 30%, which isn't fun to experience. But I think if we're in a bull market, they'll turn around and go back up. But that's the problem with chasing a bull market is you're exposing yourself to those corrections that are inevitable. It's tough, it's not, the bull doesn't give you a free ride.
Yeah. My thought with this one was if Silver Tiger just got their permit, I think it's pretty likely that GoGold will as well, right? I mean, why would they issue Silver Tiger a permit and not GoGold?
Yeah, exactly. And the odds are very very, very low.
Right. And when that happens, I got to believe that's when people will wake up even more. I mean, it
should go right back to $3.
Right. Yeah. Okay.
Yeah.
Okay. All right. Okay. Silver Tiger. Let's see. Any thoughts on, Johnny wants to know, any thoughts on Integra Resources?
Yeah, I love the stock. Absolutely love it. The reason why I love it is the location.
Okay.
So it's in Nevada and Idaho. So there are not very many U.S. mid-tiers listed on the New York Stock Exchange. They're pretty rare. And so it's going to benefit from its listing and its location. And it has two projects that it's building. And I think both projects are pretty solid. So, it's not a pricey stock. It has a ton of leverage. I mean, it's bounced off its bottoms, of course. A lot of these stocks have. But it's still, I mean, if you go and you price this thing out at, at $5,000 gold, $5,500 gold, again, that's how I do it. I don't care. I don't care about the current gold price. I don't care about the next 12 months. So when I tell you I love the stock, I don't love the stock for the next 12 months, right? I don't care about the next 12 months. You have to understand that. A lot of people are they think in the way they think in terms of, I'm going to buy this stock and then I'm going to make money over the next 12 months, right?
Yeah.
That's not how mining stocks work. No, that's not how it works. You do not buy Integra Resource and think I'm going to make money in the next 12 months. You buy it and you hold it and you wait for them to build those two mines. You're a long-term investor, and they build both mines, and this stock does extremely well. You have to think like Warren Buffett. When Warren Buffett buys a stock, he buys it for the long term. He never buys a stock for 12 months.
Yeah.
You have to think more like that. Now, Buffett thinks in terms of 5-10 years, right? We need to think in terms of like 2 to 5 years, at least 2. But I'm more of a 3 to 5 guy. I like to think out 3 to 5 years, but at least 2. Don't think 12 months. But yeah, there's so many people, that's their mentality. Their mentality is, I want to make money now. I want to make it now. I want to make it in the next 12 months. I want my net worth to go up, $100,000 this year. It's all short term. Everybody focus, short term. Keep making money. That's not what mining investing is about. It's about chasing the prize. We're chasing the prize. Now, and Integra is a good example of chasing the prize. They're currently in production. They're generating free cash flow, their Florida Canyon mine, and they're building 2 mines. The prize is this, this is how you chase the prize. We're waiting for them to build those 2 mines, and we're waiting for the price of gold to go up. We need those 3 things to happen. That's what we're waiting for. We buy a stock, we sit back and we wait for those 3 things, and we speculate. Maybe it works, maybe it doesn't. It's just a bet, but it's not investing. So.
Okay. Yes. Understand that we are doing, I guess, if you buy stocks, you're called a speculator. If you go to the casino, you're called a gambler, but we're kind of doing the same thing. We're betting the odds, but we are speculating. Alfie wants to know, okay, so Fresnillo, they just bought a deposit up in Canada. Where was it? Quebec or something? Have you followed that deal?
Yeah. They bought Probe Gold, and it was very disappointing for Probe shareholders. It was an all cash deal. So you didn't get any Fresnillo shares. So you could sell your Probe and go buy Fresnillo, but who's going to do that, right?
Yeah.
People held Probe because it was a 10-bagger. And now, okay, I got a 10-bagger now. Just because Fresnillo bought it, I'm going to go sell my Probe and go buy Fresnillo and get, my 5+ bagger. But yeah, it was a steal. Fresnillo got a fantastic, absolutely fantastic deal here, but it's going to take them 3-4 years to build a mine.
Yeah.
So Fresnillo shareholders are not, it wasn't uber accretive in the fact that Fresnillo shareholders are not going to see benefits for a while. But over time, in 3 years, 4 years, they will. But it was really ugly for Probe. And I always say this, that these development stocks will break your heart. And this is a perfect example of it. They break my heart over and over again. And this is another example, because I own Probe Gold. I own Fresnillo too, but so I had to sell my Probe and go buy another stock. And that's what I did. But yeah, very, very disappointing. We don't like these all cash deals, and we don't like to see, our 10+ baggers get acquired for low premiums. I think, I forget what the premium they paid was, but it wasn't nearly enough.
Yeah. Now, what do you think of Fresnillo's move? Like, why are they, they're basically an expert in South Mexico, right? Like, why are they going into Canada?
Yeah, absolutely. Why are they diversifying to Canada? Now, Fresnillo is on my Mormon list. So I created a list called the Mormons. And the reason why they call them the Mormons is it's the 8 best silver miners. And they're calling them Mormons because you can marry all of them. So you want to have 8 wives. You want to marry them all. So they're called the Mormons. And Fresnillo is on my list. And if you go back a little ways, I was saying that Fresnillo is the cheapest Mormon. You got to buy the stock. So go back a little ways.
Okay.
I created my list. No, yeah, I think there we go. So
right around here is March of 2024.
It was trading down here at $6. And I'm going, this is the cheapest stock. And now look, it went from 60 to 30 really quick.
Yeah.
And so sometimes, if you've been doing this, you know when these stocks are low. I've nailed a lot of these bottoms. Newmont at 30, Avino at 42, and Fresnillo at 6. It's like this is as low as it's going, people. But it still has 5-bagger upside. I don't know if I have an exit target on this one or not. I probably should put one in. But Fresnillo, quality company. We don't know why they diversified into Canada. We don't know that. Now maybe they'll trade in North America. Fresnillo does not trade in North America. They trade OTC pinks.
Yeah.
It says OTC there, but it trades OTC pinks. When a company trades OTC pinks, that means the company had no involvement in the listing. They do not provide their financials to the SEC. They don't trade in Canada. So they trade OTC pinks. It's like a company of that size. So maybe now Canada will trade in Canada. Maybe Fresnillo will trade, New York Stock Exchange or Canada, which would be really good for the stock.
Yeah, yeah.
That's what I'm hoping for. It'd be really good for the stock.
What's the market cap of this thing? Oh, 23 billion. I didn't realize it was that big. Okay. All right. Learn something new every day. Okay, we're getting close here. Let's see. Wade wants to know, do you think Guanajuato Silver is still a hold after the recent financing? What are the chances of further dilution this cycle?
Yeah, this stock has really been a disappointment for shareholders. I think they've diluted us like 3 times in the past, 18 months or so. Before this last dilution, I had them as a 10-bagger at $60 silver, and they probably would have been. And I mean, the stock was, it was really ripping, and then they did that financing. Yeah, look, it was all the way up there at 60 cents, and then they did the financing, and they lost half the value.
Yep.
So, yeah, that was nasty. They still have 10-bagger upside potential. The key, they need to find a way to grow production. They need to do a deal. They need to grow production, and then they got to stop diluting us, right? Small producers. This is a perfect example of risk. I write about this in my book. I basically say that small producers are going to have more risk than you think because they have a hard time raising money and they have a hard time making money, and those are two. Those are two bad things to have occur. So small producers, those carry more risk. They can also carry more leverage and they can carry more upside. I didn't sell my Guanajuato. I didn't add to it. I might have added to it. But I do think that the risk reward for Guanajuato is okay, because I think silver's going to 125, 150. If silver goes to 125, 150, Guanajuato is going to come along for the ride. So I do have it on my favorites list for that reason, but I do worry because usually when a company has problems, it continues to have problems. And this has been a stock that's been a disappointment for shareholders. We're back to 40 cents, which is good. Now we need to get back to 60 cents. And we'll see where it goes from there. But the next 2 quarters will be important. They need to start generating some free cash flow.
Okay. Let's see. Last one, real quick. Darren is asking, I think 1911 gold is in your top 3 favorites. What are your other 2, Don?
I don't have a top 3 favorites. I don't have a top 10 favorites. I have a favorites. It was my favorite stock at Beaver Creek. I called it, the stock, it was my number 1 pick at Beaver Creek. And I was right. It was trading, I think, at 28 cents at Beaver Creek. So go ahead and bring up 1911's chart.
Sorry,
So
what's
when
their ticker?
AUM B,
There we go.
AUMB.
Okay, here's on the, I'll bring it over the
You
counter
can
here.
you can do you can Yeah, you can do either one. I usually like to do the main exchange, but that's all fine. Okay, so look at that rip out. Look at that.
Yeah,
See that big? You see that big green candle, the breakout candle?
yeah.
That was my Beaver Creek call, and it went all the way to $1, and now it's at 72. But basically, when I was at Beaver Creek, and there was a lot of really good stories there, but 1911. The only thing that, they have a mill, they have a mill and fully permitted mill, in a good location in Manitoba, the True North mine. So, and they have a deposit, 1 million ounces. All they need, in my opinion, was higher gold prices. And here we have $4,000 gold. And because this was a mine that was in production, but it stopped production because gold prices dropped from 2011 to 2013, and they were no longer profitable. Well, if gold prices wouldn't have dropped, that mine would still be in production today. Um, so it was a gold price problem, and with gold prices breaking out, I was like, the risk reward on this stock's amazing. I mean, it basically has a low capex to restart the mine. They'll have to do a little bit of maintenance on the mill, a little bit of infill drilling, get ready, get a mining plan in place, and restart it. So I loved the risk reward, and yeah, you can see it's done absolutely fantastic. And once next year, they're going to bring out a PEA, and then they're going to restart the mine. And once they restart it and they start generating free cash flow, it's going to rip higher. So yeah, I love the story. As a matter of fact, yeah, today, look at that candle today. It's a pretty nice candle.
16% today.
Yeah.
16% today. Awesome, Don. This was a lot of fun. We got to do this again real soon. Judging by the number of questions that we got, we have a lot of cross-pollination between our audience. If people want to get a hold of you and follow your work, how can they do so?
Well, Gold Stock Data, of course. So one thing I like to say about my website is, we're not really a stock picking site. Like a lot of newsletter writers, they'll like write up stocks, write up companies, and say, these are the stocks we like, and I don't do that. My newsletter doesn't write up individual stocks, and we have no advertising on my website. It's more for people that want to do their own due diligence. I do give you leads. I rate all the stocks. I tell you all the stocks I like, but I want you to, understand them. So I have, my book is free. If you subscribe to my website, I give you the digital version for free. So I want you to, know what you're doing. You're speculating these things. You should know what you're buying. So that's what it's for. If you want to get into it, read my book first, and then if that's exciting, then you can come over to the website and you can start doing your own analysis. But I want people to do their own analysis, so that's what my website. And then if you're already involved in gold and silver, you can follow me on Twitter. I'm on Twitter all the time. Just follow me at Don Durrett. And thanks for having me on, Steve.
Yeah, thank you. We'll put your links down below, your Substack as well. Real pleasure, Don. Thank you very much for coming on the show.
Thanks,
And
Steve.
thank you. Oh, sorry. Thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.